All right, so hello everybody. Welcome back to the No Genius YouTube channel. I have a very special guest with me here today. We are interviewing Mr. Steve Johnson, fellow note investor, very successful in his own right. And today I just want to talk to Steve and have him share some insight on his journey so far and what he sees from the note business going forward. Steve, how you doing today?
I'm good. Thank you for having me on here. I appreciate it. It's always good to talk with other note investors and share what I'm doing.
Yes, sir. Yes, sir. Give us a quick introduction to who you are and how you became a note investor.
Sure. So I live down here in Miami, Florida. Great area. You never been. And I used to be in the mobile home park space. I was the COO with a team of others, and we had a handful of parks, mainly out in the Midwest. And I found that it was a lot of work. It was not passive. It was taking a lot of time and energy. And we built a good team. We had a good partnership, and I had picked up a few non-performing mortgage notes. And those took very little effort and they returned really, really nicely for me. And, you know, it just kind of seemed like a natural transition to go away from this world of mobile home parks.
Mm.
It wasn't passive, it wasn't cash flowing like I had dreamt. And, these notes that were not performing, I had to work them out a little bit and they were doing pretty nicely. So I made that transition away from that to focus on the note investing as well as help my wife with her business at the end of Q3 last year. So I'm taking this going the different direction. Before that, I've been in property management and in real estate to some degree. And actually, like the very first deal I did some 12 years ago was buying a mobile home on land and selling it on paper. And I didn't even realize that at that time I was in the note space. It didn't make sense. I just knew that I needed to sell the home. I wanted payments. I wrote up the paperwork, got it done. I've since then have learned a ton about how to do that correctly.
Now, those first few notes that you bought, were they on mobile homes or on just single family residence?
They were the first notes that I bought were actually single family. Yeah,
Oh,
so there's a difference because like I originated some notes way back in the day. Those were on mobile homes in parks.
mhm.
Didn't really know what I was doing. Now that I am familiar with the process, I understand what needs to be done correctly. I've been buying mainly institutional grade notes. Those are coming straight from the bank, and those are on single family homes for the most part.
Okay. So what was it about note investing that made you say like I have to get into this? Like, you just mentioned you bought your first few, but was it the lesser workload compared to the mobile homes? Was it the speed of the deals? What
It's actually a good point to bring up the speed. For me, it was less work. It was also less competition. There's not a lot. If you go into a RIA, you might run into somebody who's doing mortgage notes, but chances are not really. And it's this really unique niche where you are the bank, and I love that. In regards to the speed, it is a much slower, it's a very boring investment strategy to take because in my case, I'm doing non-performing. Those are the exciting ones because, when the borrower is not paying. So I have to come in, I have to work with my servicer, I have to work with a lawyer. We have to get the borrower to start repaying again. Maybe depending on the state, and what it is exactly. We have to send out all the proper paperwork and all the notifications and all of the remediation steps that are required. And it's super slow. In the case of when I'm ready to, you know, tell my lawyer, hey, let's push for foreclosure, they send out a letter and you have to wait, in most cases, 30 days
Mhm.
for them to respond. And then once they've responded, then you can do step two, and then you might wait 30 days and then you can do step three, and it's very slow. It is not fast, sexy. It's never going to be on HGTV. Probably, I don't know, maybe they'll find a way to put it out there. um, but it's very, very slow, unlike property management where you're putting out fires every single day all day long. This is just a slow burn, I would say, almost.
But you like the return though. It's worth the
I
work.
like the returns. It's
Right.
just less chaos for me. I've done my time flipping properties, doing rehab, chasing delinquent tenants, making repairs. that takes so much mental energy to switch from topic to topic, from expertise really to expertise. And here now, I have a lawyer on my team, I have a servicer on the team that I can rely on their professionalism
Mhm.
to do everything that's supposed to be done properly. I just have to kind of direct them to what I would like them to do and wait for the results.
Nice. So you're a business owner as too, as well, right?
Yes, yes. So I've got my own business, JS Summit Global, and then I also work with my wife at her business here in South Miami. She has a day spa, and I'm
Mhm.
the COO over there, helping make operations happen behind the scenes.
So I can imagine that the what you were just mentioning as far as the speed of your note deals and just letting things kind of run their course, that kind of fits fairly well into your other ongoings, because you don't have to balance so much at one time. You're just kind of waiting for responses here and there and then deciding your next move. So, how do notes kind of fit into your overall vision?
So right now, my portfolio is not that big, and most of the notes have reached a point where they've done something. Some of them have worked out where we've been paid off. We did a foreclosure. We've got one that has been reperforming. There's two right now that every week we're having to like revalidate. Is this borrower finally going to pay? And they're kind of the last stragglers of like, are we going to go towards foreclosure or not? That's kind of up in the air. It's just kind of constantly being aware of where things are at. So that makes it really easy to focus on anything else.
Mhm.
Now, that being said, my intention is to scale much larger than where I'm at right now. I want to have, my preference is I am buying notes in bulk. So if I close on a pool of notes, I'm going to have 10, 20 at a time, ideally more within a couple years, buying entire tapes of notes to take down all at once and put them into my system, have my team start processing them, getting them onboarded, and then they'll be like every single day there'll be something new to work on because there'll be
Mhm.
so much volume. But right now, the volume's low enough that's very easy to handle without pulling my hair out.
Nice, nice. Yeah, I kind of have a similar vision of buying in bulk, and I think one-offs are cool here and there if this is something that you just want to kind of use to supplement whatever you got going on. But
Mhm.
really want to go all in as a note investor, buy in bulk, search through the tapes to see the ones that you like, the ones that already work for you, and maybe shed the rest to somebody else who maybe it fits their buy box better. But yeah, I like the idea of buying in bulk as well.
Yeah.
Speaking of buy box, what falls into yours? We already know you like non-performers. You have primarily single family assets, single family residences. Anything else that fits within your buy box? First, seconds, particular states? What do you like?
Generally, I'm looking at second position notes because again, my strategy is to buy in bulk. If someone's going to lend me $150,000, I'm going to go take it and buy a handful of notes rather than one or two or three. I want to have a number of notes so that I expect as non-performers, I expect that they are not going to return anything for some time. Some of them will return in a couple months, some might take a year, some might take 2 years. I don't know until I really get into it. So I want to make sure that all of that risk is kind of spread out
Mhm.
over half a dozen or more notes at any one time. Other buy box criteria is, I'm looking at states that are generally lender friendly, but that doesn't also mean I'm not going to look in those other states. I do have some notes in Pennsylvania which require um, much more lengthy time frame in the foreclosure side of things. I'm working with some others to start exploring Florida. I'm here, but I haven't done anything here in Florida yet. And it's about time, knowing a lot of people are interested here, it's about time I start looking in this state as well. But other than that, I've pretty much stuck to east of the Mississippi River in lender friendly states, but I'm not beholden to that. Really, it comes down to what is the risk what's the discount I can get on these notes so that it overcomes any potential major risk that I might have.
Cool. So one thing you actually just mentioned is you said if I had someone lend me $150,000 to go do some note deals, to go purchase some notes, how do you pitch this opportunity to your lenders? For me in particular, my focus right now is performing notes because I'm trying to build up the foundation of my portfolio. But as someone who prioritizes non-performers, how do you say, hey, these might not return for a little bit, but when they do, you're going to be in good shape. How do you put that across?
So I'm going to have kind of a one-on-one conversation with each individual investor and make sure I know what is their goal. If they're only going to lend for a year at a time, I'm not going to take the non-performing route. I'm going to go get some passive performing stuff because I cannot guarantee, and I make this clear every single time, I cannot guarantee when that borrower is going to decide to perform in my favor, or they could pay it off early, they could go seek legal counsel, they could declare bankruptcy, they could just give up and foreclose, they could do deed in lieu. There's a lot of exit strategies that I can show them, but it's up to them to decide which one they're going to take and the time frame to do that. I cannot really force that to any certainty. If I've got a lender who's going to say park that money with me for 3 to 5 years, then I can take on some of these riskier non-performing assets and buy in bulk again and balance that stuff out. And 3 years is going to give me enough time to reposition enough of the assets that I can get some of it performing, get some payouts, do the workout that's necessary, and kind of keep moving it from there. I also will inform that investor, based again after that interview, what are they looking for, and where are the funds coming. I will figure out what that payment schedule is going to look like. Generally, it's going to be interest only. Likely is going to be quarterly payments out during that time. But if they're okay with it, we could do annual payments. If and then once I've built a working relationship with them, I'm going to be able to offer some more creative structuring where maybe I actually end up doing more of a partnership with the right type of investor who's really understanding what I do. They're comfortable with me and the process, and I'm also comfortable with them as an investor. But that's kind of that's going to be after I've made a really good relationship with them and proven track record.
Nice, nice, nice. Going back towards the beginning a little bit, did you have a significant learning curve as far as learning how to do this correctly, or was it just kind of trial and error, trial by fire?
There is definitely a learning curve especially on the paper side of things. You're looking at bank notes, you're looking at mortgages, promissory notes, allonges, deed in lieu, you name it, all this paperwork that generally we don't see. And you really have to dig into what is the legalese that you're reading. I've typically bought institutional paper, which is created by the banks, and it is not, it's not a friendly language to just pick up. And you have to dig in a bit deeper to figure out, okay, what are they actually saying is the interest rate here when you add in figure out what the index is, blah, blah, all this language. Uh, that takes some time, but that's really just building a process, learning how you're going to do it, and then I would say staying in your lane. This is after having gone to a conference just this last weekend. One thing that really stands out is people in this niche, they really do a good job of staying in their lane because it does require quite a bit of very intense specialization in whatever it is you do. If it's performing firsts, that's one thing. A lot of people who invest in performing firsts don't have any interests in non-performing seconds, and I get why. It's a totally different thing. I'm not that crazy about performing firsts because I'm not worried about cash flow. That's just how it is, and it also depends on the markets, the buy box, where are you licensed. There's a lot of factors that go into it, and everyone does a really pretty good job of specializing in their niche within this very specific niche.
Nice. On that topic, how important would you say networking is to your business? You just mentioned you went to a conference recently. Do you rely on your network to find deals? to maybe sell off some of your own deals, and how do you connect with other note investors?
I would say this is what I've been saying to a lot of people is that this industry of mortgage note investing is a little bit uh, it's more of an older, good old boy handshake, who you know kind of a deal. You can do a lot of mailers and phone calls. You're going to go through a lot of people. You're going to hit a lot of roadblocks. If you just call up a bank and you say, "Hey, can I buy some notes?" They're going to just be like totally confused and not even understand what it is you're asking, and they're going to transfer you six times, and you're still, you might not get the right person ever. Whereas when you go to these networking events, you know who to talk to. You were talking to asset managers and other note investors or attorneys, and you learn they do this niche over here and you're here. You guys can maybe do referrals towards each other. And that really comes into play a lot. I would say this niche hasn't really been taken as much into the digital age
Mhm.
in terms of being accessible marketplace like real estate has. You can go on real estate and search thousands of listings just by Googling it. There's not a lot of platforms right now where you can go and find mortgage notes for sale. And that there's more education coming out about how to do it, but because it's just not as popular, it's hard for people to really grasp it the same way they can look at um, real estate online on Zillow or Realtor.com.
Nice, nice. I kind of find that advantageous if you're willing to, go out and talk to people and reach out on, LinkedIn or whatever it is you have to do.
Yeah,
Because as you said in the beginning, there's not as much competition, and a large part of that is because it's not so accessible. Um,
yeah.
so back to your non-performers, how do you say you find success with your non-performing notes? Would you say that most of them reperform versus foreclosure? What would you say your balance is there?
Uh, Most of them are the non-performers that I specifically target are non-performers that have a decent amount of equity. There's a lot of people who are disguising a second lien as the down payment on a property, and that just means that the person has zero equity in the deal. I'm not going to touch that kind of a deal. I'm looking for somebody who they have their primary mortgage, they had it 20 years ago, they've been paying off, they're good. And then 10 years ago, they took out a HELOC, and I'm trying to buy that HELOC. So there's some seasoning in there, there's definitely enough equity. And I want to make sure that I'm targeting that type of a note. And sorry, what was the rest of that question? I got carried away with what it is I look at.
I was just asking, how many of them, if you had like a percentage in mind, can you get reperforming versus having to go through a foreclosure?
Gotcha. I would say in our numbers, maybe 20% have foreclosed.
Okay.
The rest is performing in a different way. We have various levels of reperforming. Because I'm targeting small notes where there's a lot of equity. Somebody doesn't want to lose their house over $20,000 owed when they have, $150,000 in equity and the house is worth 600. They're not going to let that go. They're going to come up with the cash somewhere. So they can get it reperforming, or they can just pay us off in a lump sum. We can also have a situation where the borrower declares bankruptcy to avoid foreclosure. It sounds majorly inconvenient and intimidating. I don't mind it that much because when someone files bankruptcy, you get the full financial picture of who that person is, what their income is, what their obligations are, and then the court is going to set out a payment plan. The only downside to not the only, a major downside, there's others, but a major downside to a bankruptcy is I lose the ability to negotiate anything because that's now on the court's responsibility. But the one that I have, it is performing. She's paying according to the terms of what the bankruptcy court said, and I'm happy about that.
And
It's
her
a it's a
bankruptcy
re
was,
all in all sense and purposes, it's a reperforming note.
right. So her bankruptcy was before you purchased the note or after?
It was actually before she had I believe she had filed it just a little bit of time before we actually were in the due diligence phase of it. So we knew going in she had it. And I think in that due diligence process, we were able to look at actually what her bankruptcy paperwork looked like. So we knew we knew really, really well where she was standing, and we felt pretty comfortable with it.
Nice. Now, do you talk to most of your borrowers yourself, or you rely on your asset manager for that?
My servicer is going to do that. Yeah, I'm not going to pick up the phone unless there's a really unique workout situation and a really unique negotiation in play. But generally, I want to stay away from that side just so I can avoid the emotional connection that I might start to get for their situation. I really need to keep this a numbers based
Right.
decision making process and not allow those stories to come in. I can be empathetic towards it, um, but I can't let that change how I'm going to run business. So I use that servicer as a layer of protection, as well as that servicer is kind of my insurance to make sure that I'm compliant with all of the regulations, what can be said and can't be said.
Right. Okay. I have two more questions for you, and I'll let you get out of here. How do you feel about the note industry as it stands today, and where do you see it going forward?
The note industry today is not it's still very much a market that is not tapped into by most real estate investors. When I go to RIAs, for example, a lot of people get really lost on what this is. They start to understand the idea, but they're always on the other side. They're on the side of borrowing the money from the bank. They don't really understand what it is I'm doing and how it works, and they also struggle with seeing how little effort it can take. A lot of these RIA investors, they're used to doing big flips and making tens of thousands of dollars, in a short time span. I'm not generally going to do that. Mine's a longer play, but for me, it's about the headache. I don't want a headache. I don't want to manage property flips and rentals and tenants and filling the vacancies. I just want to manage the paper. Where the market is going, there's a correction happening in the real estate market. Prices have been very high. Interest rates have been kind of bouncing in weird places. It's leaving a lot of uncertainty for people. But as interest rates continue to come up and people need to refinance, they're coming into trouble. Credit card debt, automobile debt, I don't know if it's an all-time high, but it's significantly higher than it has been. So there are people with debt. There's going to be, I think there's going to be an influx of non-performing notes coming out ever since COVID. There was a lot of these loans were kind of just kicked down the road, kicking the can down the road over and over and over. And Fannie Mae and Freddie Mac, yeah, they are, they've got pools of non-performing assets that have been sitting there since COVID or even pre-COVID, and now they're finally being, held to they're being held accountable that they need to put those things back into the marketplace. They need to do something with them. They need to work them out. They can't just keep forgiving and delaying and delaying. So there's going to be, I think, a rush of a lot of debt, non-performing debt, coming out in the coming, starting in the next 6 to 12 months.
Hmm. Nice pool to pick from for you coming up then.
It'll be a good pool to pick from. There'll be a lot of inventory. A lot of the old timers who have been in this industry for a long time, they started out where I am in the second non-performing space, and they left it years ago because the pool had dried up. So I'm jumping in right now. I'm in it when the pool is relatively dry and it's going to flood soon. So I'm getting ready. I'm learning what I can. I'm building my systems. I'm planning for the bigger and badder scale that's coming.
That's awesome. That's awesome. Steve, thank you so much for your time today. How can people get in contact with you if they have more questions or want to talk notes?
So I'm very active on LinkedIn, Instagram, and Facebook. You can find me at any one of those platforms at Connect with Steve Johnson. Real simple, just my name and connect with. Um, I reach out to me. I'm open to setting up, 20-minute appointments with people who want to talk notes or investing and just kind of give them my insights and share my experience and my knowledge.
Awesome, awesome. Yeah, I'll leave your link in the description of this video so people can find you. Thanks
Great.
again for your time. I look forward to our next chat and, good luck with everything you have going on and going forward.
Love it. Appreciate it. Thanks for having me on. Appreciate it so much.
Yes, I'll talk to you soon, Steve.
Bye.
Bye.